It is Friday, so it's time for my most interesting chart of the week. And this is not just going to be a single chart, but a series of chart patterns that I notice that are working over and over again. And I'm going to talk about how potentially this could get systematized into something that goes over to StatsEdge Pro members. First of all, just some quick housekeeping here. If you go to statsedgetrading.com, you scroll up to the top, you actually see some new things. I've launched a trading plan course, which was something that I ended up charging for. I've launched it now for free. So if you want to check that out, definitely do that. It goes through all of the nuts and bolts on how to build your own trading plan. We also, as always, have the free trading plan or the free intro course. This is where I sit down with my wife during COVID and we go from what is a stock all the way down to some crazy technical and fundamental analysis. You can find those there completely for free. Then also you can sign up for my newsletter where every time I do a video, I send you an email with, hey, check out this video. I also try to include some extras in there for someone as well. So you can check all that out right there. If you're interested in StatsEdge Pro, we have all of this down here below that you can read as well, but definitely check out those new changes. But what we're talking about here today is this kind of trading pattern I want to go through here. So full disclosure, I own this stock and this is a purely discretionary play. This isn't one based off of anything that, I'm doing from a technical side of things that much, or even from the quantitative side of things. I started watching this stock because we've given them a lot of money. So this company is one of those, just like a lot of names, they de-SPACed in 2020, 2021, and completely cratered from there. This company's called OWLT. What they do is they make little socks that you put on your baby and it measures it's like an Apple Watch for your kid. So it's blood ox and all this kind of stuff. We had 2 kids during the length of time that this company did nothing, which is kind of hilarious. And so that's why I was watching is I kept giving them money. I liked the product. It gave us great peace of mind when they were very young to make sure if I woke up terrified in the middle of the night, when they let you sleep, you can look and say, yeah, everything's fine. Blood rate's fine. Blood ox fine. Warn you if something goes wrong. Enough of that. The idea is that this is a pattern that I'm seeing a lot of. So I recently bought some kind of in this area when it looked like it was breaking out of this base. And I've seen this more and more. MSOS is another example here of potentially the marijuana names. The same kind of idea, not for nearly as long of time, but it stopped going down. We're at kind of where we were in February. It's just stopped going down and started moving sideways. Another one that I saw recently was DNA. The same type of move, and then maybe even, not today because it's crashing, Intel. These low bases to me are interesting in this particular stage of the market because of rotation, which is something that we talk about all the time, kind of as nauseum as technicians, where if you have generally the first mover out of a bear market, and in which case we all know what that was. It was semiconductors, NVIDIA in particular. But we had this big bear market in 2022, 2023. The first mover out of there, the thing that kind of rallied us was NVIDIA, with semiconductors absolutely ripping. But then what happens? So this is the idea behind rotation. What happens after that first mover out of a bear market? Well, a whole bunch of people make a whole bunch of money. If you owned NVIDIA, if you owned any of these semiconductors, that move out of that bear market made you a bunch of money. And then what do? Well, you have to sell some of that and move it into something else. Let's think about this as kind of like a portfolio manager. Say I'm a hedge fund manager, I usually like to own like 10% in my portfolio in each stock. So I pick 10 stocks, and though that's what I buy, and that's kind of my advantage, is a very concentrated portfolio for a portfolio manager. Well, one day I look over and NVIDIA is now like a third of the entire company, the entire portfolio, because it's just been ripping the whole time. It's just, it's tripled and quadrupled. So it's a huge part of my portfolio. Well, I got to sell that, and then I got to buy something else with it, because quite often these people can't be in cash, and in a bull market, you don't want to go to cash anyway. You want to own stocks all the time. So that's what causes this rotation, is they keep going and selling the thing that works, paring some of that down, and buying something else that they think might move higher. So what I'm seeing, and I'm seeing with a lot of these, de-SPAC companies, you can almost see the same thing with ARK in general, where it had this base for a long time and now it's recently broke out. What I think is happening quite often is people are going and they're saying, okay, well, what didn't die? as morbid as it is, right? You had a lot of these companies like OWLT that de-SPACed, they went down, they hit lows, and then they died. They Bird, bodybuilding dot, or it was bodybuilding.com or the one that did P90X, beachbody.com. A lot of these companies, they went public, they IPO'd, they died, and they just moved on. The ones that don't, they end up consolidating around this range. And what ends up happening is this ends up being where value investors start to get involved. Where if you look at it, just right in this area, you have value investors that are buying kind of in this zone and in this area. And they are just accumulating because they think, right, $50 was crazy, $150 was crazy, but $3-4 is probably a good value. They've done whatever fundamental value stuff that they do. And then they end up, because they're buying at this low and they've just run out of sellers, they end up creating these low bases where these value investors are accumulating and nobody else is really selling anything. So you get it stops going down. And again, it didn't die. It didn't go out of business when it was obviously priced here at some point to go out of business. So as they come back out of this base, this ends up being where your more momentum-driven trader, your more story-driven trader kind of takes off. If we go to MSOS, for example, right, this thing has been crashing for absolutely ever, but now it looks like it might be clearing these base. And when you see a move out of this base, you'll start to see it getting covered on the news, and CNBC will start talking about it, and people will be tweeting about it, and that causes these momentum surges. And then from there, generally what happens is you get some sort of a top and then they push back down. And just keep looking over here because I have more examples. So I think Peloton was a great example of this, where you had, a small base, but a base before the pandemic. And then this is where people were kind of buying it and said, hey, I think at $20 is a pretty decent value for Peloton. That's why it's not moving higher, it's not moving lower, because value investors don't chase highs. They wait for that price to occur. Then you get the breakout. And this was the pandemic. We all know that everybody needed a Peloton all the time, and things got absolutely crazy. It went from $20 to $200. Then you get the distribution and then the breakdown. And now maybe with Peloton, we're doing about the same thing. So this is the pattern that I think from kind of the more discretionary side of things, I'm going to be looking at more and more, is show me stocks that have been absolutely kind of cratered, but then they stopped going down. And I'm not talking for a day. I'm not talking for an hour. I'm not talking for a couple hours. Show me stocks that stopped going down for a long time. Show me stocks that stopped going down for months, preferably years. Like again, if we go back and look at OWLT, this is 2020, the price it was trading at in January 2023. So show me things that have been moving sideways for a long period of time. That will tell me where the value investors are starting to get in. And as things start to turn, you can start to get interesting moves. Like, I'm not saying these will be anything like this, but if you look at Rocket Lab, this is another great example of this. And I'm just seeing this happen over and over in this particular market, right? Goes down 2022 right here, and then bases sideways until 2025. Just showing no one wants to chase this thing higher. No one thinks it's worth a whole lot of money. But at $2-3, that's where the value investors are going to nibble and they're going to get involved. And again, I think it's specific to this particular market because we have so many things that are flying high and people have to rotate that money into this. And they're looking for names like this, names that are cheaper fundamentally, which we don't need to do the math on. We just need to look at the box and look for it to break out of that box. So now, how does this become interesting? Well, this is the reason why I do more discretionary trading. Still, right? 90% of what I do, 90% of my money is always tied up in the systems that we have over here at StatsEdge. It's because I can go and I can look at it, I can prove, I can know exactly what happened, which each of these systems all throughout, right? Day trading, swing trading, investing, I can look and I can see, yes, this is the systems as they occur. This is what I expect. This is something I don't have to think about. It's going to tell me to buy this. I'm going to look at the chart. If I like it, I'm going to buy it, right? This is how most trading should be done. But I do a lot of my discretionary trading like this because what will happen is this will give me an idea. I've got a video coming out soon where I read a study and that gave me an idea. But doing some of these trades like this, these longer term investments, they give me ideas because now this is something I could potentially be systematized. So how would I do that? Well, I would look for something that's really down from its all-time highs. That's a pretty easy thing to program. And then I would look at things where the rate of change over the last couple months to a couple years was near nothing. And now it's breaking out to new 52-week highs or something. And trying to build this pattern with mathematics into a backtester and see if there's any edge there. So again, if you're interested in this content, if you're interested in this kind of trading, let me know, right? Subscribe wherever you are, follow wherever you are, sign up for the free email list, because this is part of what I'm going to start doing in the next couple of weeks to see if I'm right. Is this a pattern that works? Does it only work in certain cycles? Does it work better in certain cycles, worse? Or am I just seeing shapes and clouds? Who knows? This is the start, right? So we start down this process, we go down this road, and eventually we get something that pops out. Otherwise, the most interesting chart of the week is anything that is putting in a long low base like this, finally resolving higher, like OWLT, marijuana, anything in the ARC space is looking interesting. When you're doing your homework this weekend, I think you should look for names like this. And until I see you next week, get away from the screens.